Good afternoon, everybody. I got a daily chart on that Dow Jones. In the month of January 2019, the good news is the bear trend has left the market, and it has. However, you have to be aware that October, November, and December of 2018, we were right up to our elbows in that bear trend. So basically, you have a 3-to-1 ratio. And what does that mean? Three down months and one up month. And we've gapped up. We're hitting that 200-day moving average. And I'll let you know what it is. 24,981 is that 200-day simple moving average. That orange line right up above it is 2505. And guess what? We closed at 25014.86. And basically, that is resistance. We're in the full fledged earning cycle. And we've had big gap ups with these earnings. And even some of the earnings, if you've been following what we have said, some of those earnings were not that great. And they weren't. And they popped the market up. Facebook went up big today. We had Tesla get slammed. We had a bunch of them that have come out in January. Now, the green line and the orange line. And we started with a gap. That 200-day was resistance. The blue line is a rising 10-day simple moving average. I'm going to let you see the weekly chart on the Dow. And here's the weekly chart on the Dow. I'm going to clear the trend lines. And what you're going to look at here is exactly what you need to look at and what I'm giving you. Here's how it works on a weekly chart with the Dow Jones. And it goes like this. We got above, believe it or not, that black line that you see up there is a 50-week simple moving average. And that 50-week moving average on the Dow is 24,901. Not only that, the upper line that we have, it's a red line, and that's a 20-week moving average at 24,875, and we cleared it. So let me just let you know that this is going to be the wall of resistance up there at that trend line. Now, we're going to have to clear, which we did, up above this weekly horizontal line that was resistance. The last couple of weeks, we're back above it. What I'm going to do for you, I'm going to do the following. I'm going to blow this up. This is this week with the earnings. You can see that on a closing level, we're above that 50-week moving average and that 20-week. That blue line is a 40-week simple moving average at 25,005.4. Let it be known that we have special programs and we teach you how to work with moving averages. We have training programs on that. Now, we are in a bull trend. We had, once again, 3 months down with the bear, and we have 1 month up. In January of 2019 has kicked it off with that earnings season, and we've had a lot of gap ups. And this is a bull weekly chart, a bull chart. We're above those moving averages. We're no longer below it. And I can say this, the volatility is going to get bigger, and it is, and it will. And don't think that you know what's going to happen when it comes to volatility. It's going to be back. And when it does, that volatility is going to be bigger than what you've seen in October, November, and December of 2018. And you're going to have to deal with it. So you better get that in your mind right now. And the market's going to prove it to you. Right now, the bull is back in control. We're out of correction territory. However, call us at 702-685-0772. We have programs. And so we're going to see exactly how far we can move above these weekly moving averages. Another thing that you need to be aware of, and you better listen, when this earnings season starts to wind down, the market's not going to have any big gaps. The only gaps that are going to happen is volatility gap. And that volatility is going to be exceptionally bigger in the calendar year of 2019, and you don't have to lose your money. We will give you the entry on the options. You can get into free 5-day trial. You could see the live limit orders on entry, exit, and stops. You can do that. See it. You can believe what you see, not what you think.